Welcome to the Mayor of Money podcast with former Burlington Mayor Rick Goldring of Goldring Financial Leadership. In this podcast, we provide successful business owners, including doctors and dentists, with insights to minimize tax and risk while maximizing retirement income and future legacy. Join us for this journey as Rick draws from years of experience and guest experts, including successful entrepreneurs, to provide unique strategies and approaches to estate and financial planning matters, as well as business in general. Now, on to the show.
So, ladies and gentlemen, today I'm very happy to welcome to the Mayor of Money podcast, Carmen Campagnaro. Carmen is an amazing lady, very successful in so many different ways. I'm going to share with you a little bit of her bio because it's quite extensive and quite impressive. She's a leader in all things real estate. Her passion for real estate started at 18 years of age, and now she runs a vast and successful array of real estate focused businesses. And among her many current roles, she is the founder and president of Pro Funds Mortgage, an investor focused mortgage brokerage, the co-founder and managing partner of Valour Group, a development and construction group of companies, the co-founder and trustee of District Property Trust, a private real estate investment trust, the founder and owner of Once Upon a Stay, a North America-wide vacation rental company, and the co-host and producer of 30 Minutes to Wealth, a Canadian real estate show. And with her rich expertise in real estate, Carmen is well known for going above and beyond to help her clients reach their financial and investment goals. Carmen, welcome to the Mayor of Money.
Well, thank you for having me. Very excited.
You know, it's when I read this and I look at your background, you have so much to be proud of what you've accomplished. But take us back to the very early days when you started this passion for real estate. I know that you bought your first property, your first piece of real estate at age 18, but was there a point before that when you had developed this passion, or was it simply buying your first property that really sparked you?
Yeah, I think it was the first property. I've always had an entrepreneurial spirit as a kid. I remember I found piles and piles of these flowers in somebody's garbage, and they were like beautiful. And I'm thinking, oh my gosh, I think I might have been 7 or 8, and I grabbed them and I went door to door and sold them. That was at 7 or 8. But real estate, where my passion really is. It started, I think, when I was 18. I purchased my first property and I joint ventured with my father, and it was in Burlington, Ontario. And I did really well with it. We made, it was just before the crash in 1990. And we sold the house just in the nick of time. And we made easy $100,000 each. And for an 18-year-old, that's huge. In the 80s, specifically late 80s. And so that was my first taste. So what I did with that money was I bought a house in Hamilton, because my parents said, don't go to Hamilton, bad people there, don't go there. So Carmen went to Hamilton, of course. And so I went there and I bought a house, but I converted the upper level into a duplex, into an apartment. So basically I had a duplex, and I lived on the main floor, and I rented out the upstairs, and it helped me with my mortgage payments. And I also ran my own business in Burlington, Ontario, called My Video Store. So I have had a very entrepreneurial mindset for a very long time.
So I've got to interject here and ask you some more questions. So you're 18 years of age, you buy a property, you joint venture with your dad, you each make $100,000. You go into Hamilton, you buy another property, you create another income source from the extra units. So you turned a single family dwelling into a duplex. And then at age 18, you operating or started a video store.
Yes.
You're 18 years of age. So Is anybody coaching you along the way here? Were you taking any courses at school? Did you go to community college? Did you go to university at this time?
Oh, well,
Were you
yeah,
heading down that path, or?
no, that's the interesting part. I was very rebellious as a child. I'd say probably in the grades 7 and 8. So, my attention span was very, very short. And I really didn't like going to school or being in the regular curriculum. So I really just made it through high school, and that was it. And I started working. I think I had the only job I've ever had to working with somebody else was at a store called Stitches in London, Ontario, because that's where I grew up. And from then on in, it was just learning everything just by trial and error. And that's the only way I learn. It doesn't matter if I would have went to a school that taught me how to do things. I'm the kind of person that has to dig it in and do it myself and figure it out. And even if my mom says, don't do this or don't do that, I'd say, okay. And then I'd go do it and I'd get hurt or something. So it's learning, the school of hard knocks.
Well,
And that's basically.
You learned really early that you weren't worried about mistakes.
No,
You
I
grew from
wasn't.
those mistakes.
I grew. And you know what? I guess that's just my personality. I wasn't fearful of anything. I said, well, I always had still have a very positive outlook on things. So, and I just think positively, and I think, okay, it's going to work. It's going to work. We're going to make it happen. This is going to happen. And I think with that attitude, it really does nudge you along in the right direction. And so I really did not have anybody mentoring me. I didn't have a university degree or even college. It was just me trying things and learning as I went.
And so the first formal business, the first business where you incorporated was what?
It was called My Video Store in Burlington, Ontario.
Now, did you own real estate, or did you just lease space?
Yeah, I leased space
Yeah.
right at Guelph Line and New Street in Burlington, Ontario.
And I do remember that store because I grew up 2 blocks from there.
Yeah.
And how long did you have it for?
Oh, I think it was easy 10 years.
Okay.
And we sold it just before video businesses kind of were obsolete when all the new technology came out, which was a great blessing for us. So I opened the store. I worked it. That was my full-time job. My dad, we actually expanded. And when we sold the house and made that extra 100,000, we each took 50,000 of that 100. And my dad invested in the video business now. And then I also, and then I bought my other house. So we actually partnered on a larger video store. We took 6,000 square feet. That's the one right at Guelph Line and New. And my father and I ran that business. And my dad was he was an estimator, civil engineer. And then at night he came and worked there. So I have an idea where the energy levels came from, because he would work and then come there, and it was a social venue for him. But we were very successful. It was a great little shop.
So fast forward to where you are today, and you've had lots of success along the way, but you do have a company called Pro Funds. Tell us about Pro Funds.
Well, Pro Funds Mortgages is a mortgage brokerage. I started that about 25 years ago. But I will say prior to that, I started a company after the video business called Bumpy Roads, which was a children's clothing company where I designed and manufactured children's wear. So I also did that before I got into the world of financing. And when I started the brokerage, it was a very interesting story. So I'll go back a little bit, because with the clothing business, I had a company that came in and bought all my inventory, because I wholesale to boutiques, and they took about 250,000 of my inventory. I had an account set up in the United States with an agent there. We sold to Neiman and Marcus. It was my first spring that was going to have a big production. And this company came in, took out everything, and I had to go personally bankrupt. They fled with my material, never paid me. Doors were shut down. I lost everything. I had to start from scratch, and it was devastating. So I had somebody at that point in time say, Carmen, get into the mortgage business. So I went and got my license, started in my basement with a fold out table, my washer and dryer beside me, my kids screaming upstairs because they were little at that time, and a fax machine, which will date me. I don't even want to say that, but yeah. And I started just to work very hard that way. And I put an ad in the Hamilton Spectator, more, if you need financing, call me. And I had a person call me and said, I need financing on John Street and Barton Street for a restaurant, which was the most challenging deal probably anybody could do. But I was very determined, and I ended up getting it approved eventually. And the person that I got it approved with said, well, just so you know, I happen to be a speaker for a real estate investment training company, and I train 150 people a month. And I am so thrilled with your determination to get this approved, where I went to so many other people and it didn't happen. And I'd like to put your name on the screen so that when investors need financing, they can come to you. And I said, holy smokes. And everyone around me said, Carmen, why are you wasting your time on this dud deal? It was like, I don't know, $100,000 or something crazy. And I said, no, I'm going to do this. I'm going to do this. And it just happened to be that person, crazy, was speaking to 150 people a month. And my name was on the projector saying, or wherever it was on a screen saying, call Carmen because she's the one that's going to get it done for you. And then boom, all the stuff landed on me.
So the deal at John in Barton and Hamilton, the restaurant. So did you get money from a traditional lender, or was it private money that came in that you set up, that you brokered that particular relationship?
Well, I went to every institution possible, and we did have private funding available. But I ended up getting it done from a credit union in Saskatchewan, believe it or not. I exhausted all of Ontario lenders. I went out of province, and I got it done that way, and got him a decent rate, and he was happy. So, but private money is a big, big role in our business today and then.
Wow.
Mm-hmm.
That's a great story. So today, Pro Funds, now you look at the website, it appears to be for people that want to invest in mortgages.
Yes. So we cater to real estate investors. I mean, obviously, Rick, if you were going to come to me and say, hey, can you get me a mortgage on my home? Absolutely. I'll buy down your interest rate, so I'll get you the best deal possible, because the banks pay a broker on residential mortgages. But we've been servicing real estate investors from people buying single family homes, duplexes, triplexes, flipping, all types, commercial, industrial, over the years. And as I was dealing with investors over and over again, a lot of them expressed interest in investing passively. And I said, well, wow, I know Bob over there looking for a mortgage. So do you want to lend to Bob? I'll put the paperwork together. And yeah, so it started to really evolve. And we built a very large network of investors that invest in mortgages and love it. So we do offer both services. We do investing for investors that want passive mortgage lending, and we also do financing. So we have a complete team that does residential, commercial development, land, all of that.
So you deal with the traditional lenders as well as the investors.
That's right. That's right. So we have, mortgage brokers have access to, excuse me, one second. Hundreds of investors or hundreds of lenders.
Right.
So if you're looking for a mortgage and you're somebody out there applying for a mortgage and you're going to bank, each bank pulls your credit bureau, where if you come to a mortgage broker, we can pull your credit bureau once and access multiple lenders, and that the general public aren't even aware of.
So, but with regard to passive investors, people that have money that would like to earn more than a guaranteed investment certificate in a bank or other financial institution, they have money available,
Yes.
and you could help them deploy that money and earn an interest rate greater than the guaranteed rates that they would get in a GIC.
Yes.
And how do you determine the type of investment? How does the investor make a decision about what's in front of them? Do you sort of tie it up in a bow so that they basically, if they want to get 10 or 10%, say, that you're able to get 10% for them, you wrap it up in a bow and they should feel good about accepting it? Or should they do their own due diligence as well and making sure they're investing appropriately?
Yeah, that's a great question. We have an experienced team of underwriters and analysts in the company. So first, what happens is we have the borrowers come to us and request for financing. What we'll do is pull a credit bureau, check out the credit, who's borrowing the money, why are they borrowing the money, what is our security, where is it located? With private lending, what happens is the deal comes into the office and our team of experts will go through it. We'll pull a credit bureau, we'll look into who the borrower is. And typically with our company, the people that borrow are other real estate investors. So for the most part, their credit is good. They have good income and things like that. So it's not really a higher risk investment, which is great. So this is why we have such a demand for private lending with our investors, because they see the type of people that we get in. It's not someone that's in distress. And it's not that we wouldn't help somebody. It's just that's the type of business that comes in our door. We'll have an appraisal that's current. And we mandate that we have an appraisal that we've ordered. And if it's not, and we're in a tight timeline, we'll have one of our appraisers assess the report to ensure that it is accurate and realistic, because that's a very important piece. There are people out there that can persuade appraisers to increase the values of real estate, where that becomes dangerous because we're lending on the value of that real estate. So the important part is, what is the loan to the value of real estate that we're lending on? And we can do first mortgages, we can do second mortgages. And when we finish assessing the deal, we'll price it accordingly, like to what we think is fair based on the borrower's credit and credentials and the property and what the use is. And then we send it out to our list of investors and say, deal alert, new first mortgage opportunity. It's paying 8% interest plus a 2% lender fee, or it could pay 10 and 2. So the range for first mortgages is anywhere from, let's say, 8 to 12% interest. And typically there's a lender fee associated, which means the lender receives a bonus payment on closing of the mortgage. So that's also part of the return for our investors. There's second mortgages that will range from, let's say, 10, depending on the loan to the value, to probably 16, 17% on their money. And it's a similar process. So everything is done through a lawyer. So it's if you've done your analysis and you have an appraisal, it's a pretty secure investment. And we've had great success with it.
And with people that invest in private mortgages, what sort of term do they invest for? Like how long do they commit their money for?
Yeah, so right. So typically it's 12 months, and there will be an option to renew after a 12-month term, but that is solely up to the lender's discretion and whether they're in a position to do so or not. And if not, then we can find a replacement mortgage for these people.
Are there any particular unique set of parameters or legalities that are put into the agreement that wouldn't be there with a traditional mortgage with a traditional lender?
Really not. It's pretty much the same thing. It's a lot less onerous from the perspective of the borrower. It is a private loan, so we're not asking for what the bank would ask for. We do want to make sure our clients are secure, but we're not going to ask you for financial statements for 3 years and income statements for 3 years. We're very, it's more of a make sense approach. And, is the property a good property, and is the security good, and is the borrower going to pay back?
Right.
That is the priority there. So.
And I guess on the first mortgage, you've always got the house. I mean, you've got the property, I should say. That's the security on the first mortgage.
That's right.
And
So, and a second.
and the second, but
Yep.
the second, you're in second position. So there's a little bit more risk. So you should be rewarded more for it.
I would agree. Now, it depends also on the loan to the value.
Right.
So if you're doing a second mortgage at 55% loan to value, you've got a lot of room in between the value of the real estate and how much money is owing. And that should be more than enough to protect the investor. So the maximum loan to value I feel comfortable with is about 80 to 85% of the value of the real estate.
What is the REIT, and what type of person typically invests in a private real estate investment trust? And what's the structure of them, and what sort of returns can people expect in the longer term, recognizing that you're not guaranteeing anything per se?
Right. Well, the REIT is more of a partnership with ourselves and the investors. It's a private REIT. It's not publicly traded.
Right.
And personally, that's a positive thing. That's my perspective, because you're not dictated by what's happening in the stock market, which is absolutely insane right now. Everybody's up and down and all over the place. So it's dictated by what the real estate market is today. And I've been doing this for so many years. I'm not going to say how many because that'll age me again. But real estate has always been my safety zone for my investments. In multi-residential, for example, there's always a time people need a place to live, especially now. Right now, the housing crisis is enormous. And there's another 1 million people coming into Canada, and probably a good percentage of those people coming into Ontario. And there's such a demand for housing. So multi-residential, you cannot fail with, unless you have poor management. So it's all about the management on that side of it. But our REIT is diversified. So let's say, for example, we have multi-residential properties. So 30 units, 40 units, 50 units, 60 units, all geared to rental type properties of residential. And then you have commercial, which would be like, let's say, strip plazas that have, pharmacies and liquor stores and beer stores and veterinarians and things like that. So those are always in high demand. So we have those. And then we also have in our portfolio a lot of industrial properties. So we really target our focus and energy on different types of real estate that we feel secure with our knowledge and expertise in the business. And we target our energy on those types of assets to acquire. So we're not just down one. Multiple REITs offer only one type, like it might be an apartment REIT, or it might be just a commercial REIT, or it might just be industrial, where we are able to combine all of those into our portfolio to mitigate potential risk. So what happens is, and we said, why don't we start a REIT? We have opportunities galore coming at us with deals and buildings, and we're so good with buying properties and creating value. Why don't we share that with our investors? So the REIT basically is a partnership. And the partnership is where investors invest in it, and you actually are an owner of the properties that we purchase together. And so you benefit from the cash flow that we receive from the properties, as well any of the upside that we create while we manage and do our best to create more value in the assets. And as we build, the value increases. So our targeted returns are around 12 to 16% a year on your money. 8% of that is distributed monthly and paid monthly. So it's an 8% annual, and it's distributed monthly. If people don't want to actually get the cash back, they can roll that 8% into more units and compound their returns even more. So it's a great option for people that really don't want the cash flow. But if you do want the cash flow, the benefit is that it's a return of your capital. So it's tax deferred. until you sell your units in the REIT. Our mortgages on the REIT or in the REIT are primarily under 65% loan to value. So it is considered a lower to moderate risk investment. So it's I think it's a very good, safe place for people to be in a climate like this. And because of the fact, I feel now I'm biased. I'm in real estate wholeheartedly, all of it. I love the industry and I've done very well with it and I know it very well. So, and I believe that real estate will just continue to grow. And in the future, and I'm not sure how far in the future, I believe that it'll be very hard to acquire real estate from an average person. So I think that having money in real estate is very important for people.
And you mentioned the 65% loan to value ratio, that's the where you're at with your particular REIT. And so the impact of these, 50 basis points and 25 basis points interest rates increase do not affect your costs significantly enough to erode in a significant way the returns that your investors get.
Now, that's a great point. It is very important. Obviously, interest rates do affect your cash flow, and it does affect any ability to leverage. But we are at the lower loan to value. We can go up to 75% if we wish. But currently the average is about 65% in our portfolio. A lot of the properties that we're going through. So I don't want to confuse matters, but we have another company called Valour Group, and we're a developer, and we build and develop apartment buildings. And currently there's a very a big incentive with Canada Mortgages and Housing for builders and developers to create more income producing properties. And they've offered very reasonable or very exciting terms. You can get up to 90% financing on the cost of all of this and a 50-year AM. So amortization on the mortgage, which brings down your payments. So the REIT has site on a few projects that are under construction at the moment that will come in with that amazing program that CMHC is bringing in. So those rates will be very favorable. The terms will be great. And the current portfolio, we have locked in terms for 5-10 years. So for the most of the portfolio, we're in a pretty good position. It's for any new acquisitions that we're looking at, that has to be taken into consideration. And it's all part of the assessment of whether or not we're proceeding with it. And then that decision is made by a board of directors that we have. And the decision isn't just one person, me going, yeah, I want to buy it. It's a group of us that make a decision. Is this the best thing for our REIT? And everything is assessed in a way that will make sure that we're doing everything we can to grow the REIT in a positive way.
So we've talked about your REIT. We've talked about ProFunds, the mortgage arm of your organization. You just touched briefly on development and construction. We don't really have much time to get into that. And then we have your vacation rental company that had some properties down in Fort Myers Beach, I know, which was a major challenge.
That's right.
Love to have time to talk about all that, but I do want to talk about you. And you're a pretty accomplished person. You've got different businesses that you're involved with. How do you manage your time? Like, how do you prioritize in your day what you're going to do and what's most important that you need to work on? Because you've accomplished so much, you got so much on the go. It must be a challenge. It must be a challenge. Yeah.
That's an awesome question. I wish I knew myself. I just do. So, we do have a great team. So we have a good company. Our staff are very helpful in a lot of ways. So it's not all up to me 100%. I have a great partner. So our team really contributes to a lot, but yes, it is a lot to manage. And, I just have a very good way of dealing with a lot of things at one time. so, things come at me all the time, all day long, and it's okay, we'll do this, we'll do this, we'll do this, we'll do this. I'm very decisive. I don't, procrastinate or, question things. So I just make decisions like that. And I have a good team beside me. So that's how we do it.
Well, you know what? This has been most enlightening. The discussion we've had, Carmen, hearing about pro funds and hearing about district property trust, the REIT, hearing about passive ways to invest in real estate. But it's particularly a pleasure to get to know you a little bit better and hear your history, hear what you've accomplished, and hear how you make it all happen today. You deserve a lot of accolades for the success you've had. And thanks very much for taking time to be a guest on the Mayor of Money. And I'll be so bold as to say, we got to have you back.
Well, thank you so much. And, this has been a great pleasure. And I really respect what you're doing. And because we're both Burlington people and we've been in this community for a long time. So it's an honor to be here.
But thank you. Thank you, Carmen. This has been absolutely fantastic. And we will have you on again.
Awesome. I look forward to it.
Thank you.
Thank you for listening to the Mayor of Money podcast. Click the subscribe button below to be notified when new episodes become available. If you'd like to have a one-on-one discussion with Rick or have an idea for a particular guest or topic, contact him at rick@rickgoldring.com. See you next time on the Mayor of Money podcast.